Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the forex market. So you can see, despite that we have considered in the weekend the possibility for a bit deeper retracement on intraday charts in euro currency, it still was able to stay around 112.55 area and has shown the rally yesterday. Yes, it was not without external help. So because Donald Trump on inauguration has said that he doesn't intend to put the tariffs over the China, Europe right in the day of the inauguration immediately. So it has actually relieved some situation and triggered the drop on the United States dollar and rally on the dollar rivals. But as you understand, this is very short-term and really fragile background for possible bets on upward performance in general. So because the tariffs sooner or later but will be imposed. So my suspicion is that Donald Trump probably wait resolving the situation with the debt sale, because with this situation will be resolved, it could really be easier for United States to manage foreign affairs. And if even something will go wrong when the tariffs will be imposed, Donald Trump will have some room for the maneuvers with the debt and with the budget spending and other things. Now he actually stuck in the debt sale and has no ability to regulate the possible government spending. So that might be some reasons for postponing of the tariffs imposing. Although actually Druckenmiller said that don't relax. So the tariffs will be imposed and don't actually be deceived with this recent action. This means nothing actually. At the same time, yes, in the final moment I would like to mention, in the ING today report, ING Bank I mean, they said that probably 104 area should hold any rally on the EUR. But here with this recent performance, it seems that the uncertainty factor is coming on the first stage. Because as Donald Trump said that tariffs will not be imposed immediately, he also could say later that maybe they will be imposed later, or even will be imposed with not as large as initially suggested, and so on. That's why, relying purely on the technical picture that we usually do in these updates, I would say that the current performance totally corresponds to things that we discussed in the last couple of weeks. As we said, our primary object here is watch for reaction of the market on a very strong monthly 1 or 2 support area. And since market has formed and actually has completed the morning star of this ABCD pattern, this action was relatively strong. And as you could see on the lower time frame, in particular on the hourly chart, you could see that the hand and shoulders, so it actually was based on this morning star pattern initially, has been completed accurately with this fast acceleration. It means that the market also can try to go to the XOP target of the same ABCD pattern, but a bit later. And you could also see that actually 2 different hand shoulders already has been completed. The first one, right in the beginning, if you remember, we also talked a lot about this pattern, and that was early signal that might be used, although we said that it's accompanied with some higher risk, but if you would like to, you could try. Then we have traded these hand shoulders, and now by taking a look at this time frame, you could see that also this fall time frame chart, you could see that also we could get these hand and shoulders, right? Next stage, this is very typical for hand and shoulders, and the nested doll for the hand shoulders pattern is absolutely normal situation. And also you could see even on a daily chart, even larger hand and shoulders might be formed. So absolutely normal. The same pattern you could see on other markets. First of all, this is a dollar index, approximately the same pattern, right, is forming, and with the neckline right at the previous OP target. That's where we actually previously also talked about. As you can see, this major ABCD pattern, weekly pattern you can see here. So OP has been completed. Now it's neckline for possible hand shoulders on a lower time frame. And what is even more interesting, that we have the very similar, at least chance to be formed on 10-year bonds. And here's performance really typical for the hand shoulders: acceleration on the slope of the head, gap down, but probably based on the same talkings about tariffs and so on, so yield had dropped. And this pattern also suggests that it might be, well, some upward continuation on the euro currency as well. So from that standpoint of view, I do not see any reasons to break our trading plan that we are following for the 2 weeks already. Now I would say that with this performance we get more confirmation of that the euro currency is actually trying to show more or less significant bullish pullback. And now we just will be watching for this retracement on the full time frame chart. Retracement probably will be deep, or at least based on the harmony of this pattern, seems should be a bit deeper. We will see. And on the right arm, once again, it will be the question concerning possible taking the long position. Currently, we're watching for a downside bounce. You can see, by the way, this external, actually verbal intervention from the Donald Trump. You can see both grabbers have been erased. The market just jumped up, but it was unpredictable. But still, you could see that euro currency was able to hold the harmony of the hand shoulders. Initially, we thought that maybe might be ABCD down, slightly lower. But we haven't got this downside action, and market was able to stay and keep the harmony, although from a technical point of view it was not suggested. If a deep retracement was more logical, but sometimes it happens when external help comes and actually support the normal shape of the patterns. So for now, what we could say here is a kind of the double repo, but it's not clear the double repo, and it's actually mostly is completed, but you can see kind of the double top or something. But by the shape, it's very similar to double repo pattern. And here we will be watching for a couple of moments. I think that preferable level to watch for, at least the first level that we will be watching, is 103.25, 103.35 confluence and neckline. So for the hand shoulders, that's critical. Because if market will be able to stay outside of this confluence, it will keep chances to go to the XOP target. Now we're at the OP of this ABCD pattern, but if market will stay outside the neckline, above the neckline, it also will keep chance for moving to the XOP. And rally actually here, from technical point of view, suggests this. And next level we'll be watching for, it's for some case 102.75. In this case, if market will drop here, we will forget about the XOP because these hand shoulders will be not valid anymore. This will not be the failure because the target already is done, and these hand shoulders will not fail if market returns back down. And we, in this case, just turn to our attention right to this big pattern. So we'll be watching for its progress. So for now, let's consider these two levels. Once again, as we previously said, on the gold market and the euro currency, with this current volatility and really very unstable market, the splitting of the position, when you are sure of the direction, split of the position, it might be one of the best solutions in the current circumstances. Rather than trying to catch the precise deep and bottoms with the whole trading line, it's a bit more uncertain. So that into what we have. Let's keep watching what Donald Trump will do in the first trading and actually first job date in an office. So we'll see.